FHA mortgages. Now, you may think those are only for first-time home buyers, and although they are the most popular loan that I see used by first-time home buyers, they're actually available to anyone purchasing a primary residence, meaning a home that you're going to live in year-round. I'm Brand the Mortgage Man, and I've helped more than 10,000 home buyers over my 22-year career in mortgages, and I want you to be someone who really benefits from my knowledge on this process, and in this video, FHA mortgages. So if you're even considering an FHA mortgage, make sure you watch this video in its entirety so that you know all the nuances that come along with them. And if you want a more detailed explanation of how FHA mortgages work, make sure to check out the video in my link. So there's a few things that are important to consider about FHA mortgages. For one, like I said, you do not have to be a first-time home buyer. So I just want to debunk that myth. Do not have to be first-timer, right? It's a common misconception. The FHA does not stand for first-time home buyer. It stands for Federal Housing Administration, which is a government entity that actually insures these mortgages. It allows you to put down 3.5% versus other types of mortgages for non-first-time home buyers that require a minimum of 5% down, right? So that's the big thing. A couple of key points when it comes to FHA mortgages, and I have some notes that I made for myself because I want to make sure to touch on all of these, right? So we know, for one, it allows for a low down payment, as I mentioned. It allows for 3.5%. Something you may not know is that if the property that you're purchasing using an FHA mortgage is currently owned by HUD, the Department of Housing and Urban Development, because it was foreclosed on by someone who had an FHA mortgage in the past, you can actually purchase those properties with only $100 down. These are called HUD REO properties, real estate owned by HUD. And you can check those out on the HUD home store. Now, FHA loans also allow for lower credit scores. And when I'm saying lower credit scores, I'm comparing to a conventional mortgage, which would be an alternative that a lot of buyers would use. Now, when I say lower, it actually allows you to go down to a 500 credit score with an FHA mortgage. Most lenders won't go below a 580 though. So let's use that number. So a 580 credit score versus a 620 or above, which is the requirement for a conventional mortgage. So it's more lax on credit score. 40-point swing is rather substantial. If you've had a credit event, like a substantial credit event, such as a bankruptcy or a foreclosure or a short sale, right? There's a lot of people that fall into that boat. FHA loans have shorter waiting periods after those events than a conventional mortgage does. For example, a bankruptcy is 2 years. A foreclosure is 4 years versus a conventional loan where it's 4 years for a bankruptcy or 7 years for a foreclosure. It's a substantial difference. If you want to buy a home and not have to rent or live with family and you had a past credit event, as many people have, well, FHA is going to allow you to purchase that property much sooner than a conventional conforming loan. It allows for a higher debt-to-income ratio than a conventional loan, right? So debt-to-income ratio is a comparison between your gross monthly income, meaning your monthly income before any taxes are deducted, and your monthly expenses. And part of those monthly expenses would be the payment on the property that you're planning to purchase. So with a conventional mortgage, if you have excellent credit, you're looking at a maximum debt to income ratio of 50%, 50. On FHA, that actually can go as high as 57%. So you have wiggle room of an extra 7%, which could be the difference between qualifying for a home that you're really happy purchasing, right? Versus buying a home that you really feel like you're settling for when it comes time to buy. And although I don't advocate for having the highest possible debt to income ratio for qualifying, you may be someone who is a two-person household, and maybe the person that is buying with you, or your spouse, for instance, doesn't meet some sort of requirement that is needed for a mortgage, but you still have that income. You can still feel comfortable using only your income and having that higher debt ratio, knowing you have the additional income in your household. But either way, an FHA loan will allow for a higher debt to income ratio when comparing it to a conforming or a conventional mortgage. It allows for mortgage insurance that's cheaper in some cases, depending on your credit score. So anytime you put less than 20% down, getting a conventional mortgage, which is what we're really comparing this to, you're going to have to pay mortgage insurance. Mortgage insurance is something that's added to your monthly payment. You pay it every single month. On a conventional loan, it eventually goes away once you have at least 20% equity in the property. But the cost of that mortgage insurance can vary depending on your credit score, your down payment, the number of borrowers on the loan. The mortgage insurance on an FHA loan is going to be the same for anyone, regardless of their credit score, regardless of their property type or number of borrowers. The only thing that would cause the mortgage insurance to vary slightly from one person to the next is if they're putting down more than 5% or less than 5%. Because when you're putting down 3.5%, let's call it, which is the most common down payment on an FHA loan, the monthly mortgage insurance is 0.55%. If you're putting down 5% or more, it becomes 0.50%. So it's not that substantial of a difference, but there's a slight difference. However, on a conventional loan, it could be 2% per month that you're paying in mortgage insurance if your credit's low and you have a low down payment. So an FHA loan is a better option for someone who has a little bit lower credit scores combined with a lower down payment, because you're actually going to save money on the monthly mortgage insurance. Now, if I'm going to say something that's considered somewhat negative about an FHA mortgage, is that FHA mortgages have something called an upfront mortgage insurance premium, UPMIP. So you may say, wait a minute, I'm paying mortgage insurance on an FHA loan. I already know that. Well, something that you're also going to pay on an FHA loan is this upfront mortgage insurance premium. And that's equal to 1.75% of your loan amount. Now, you don't actually have to come out of pocket. And I don't think I've ever met a borrower who came out of pocket for that upfront mortgage insurance premium. However, it is rolled into the loan. So if you get an FHA mortgage, you're going to owe more money on your property, even if you had the same down payment as going conventional, because this extra 1.75% mortgage insurance premium is rolled into your loan. So you just want to keep that in mind. Now, it's a good thing and a bad thing, right? It's a bad thing because you owe more money. It's a good thing because you may only be eligible for an FHA mortgage, and this is the only type of loan product that is allowing you to purchase a property. FHA loans also tend to have lower rates than conventional mortgages, just in general. Right now, an FHA mortgage rate is almost a full percent lower than a conventional mortgage rate or conforming mortgage rate. So that can make a substantial difference in your monthly payment and your ability to qualify. When you combine the fact that you're going to have lower mortgage insurance with a lower interest rate and the fact that you can have a higher debt to income ratio, you're likely going to qualify for a higher purchase price using an FHA mortgage than you would if you're going to use a conventional conforming loan. So if you want to learn more about FHA mortgages outside of just the basics that I've given you in this video, make sure to watch the video in the link, because I give a detailed explanation of how FHA mortgages work and all of the nuances that come along with FHA financing. And if you just want to learn about mortgages and real estate in general, make sure to subscribe to this channel and leave a comment below about your own scenario. I do reply to 100% of the comments left on my videos.